There's an overwhelming amount of financial advice in the news and on social media. Who do you listen to? Are they looking out for what's best for you? How do you tune out the noise? In this podcast, trusted advisors Emily Agosto, CPA, and Amanda Vaught, JD, bring their extensive education and experience to delve into all aspects of personal finance. Emily and Amanda make topics like investing, taxes, and financial planning interesting and accessible. And they provide a framework to help you think through the plethora of financial advice and news out there. Are you ready to start making the best personal financial decisions for you? Welcome to Connecting the Dollars with Propel Financial Advisors.
Hello and welcome to another episode of Connecting the Dollars. Today is our second episode in the Mid-Market Insights series. Our last episode number 49, talked about NVIDIA and AI and how that's affecting the markets and your portfolios. So go back and check that one out if you're interested in that type of subject. And today we are going to move on to talk about the Fed and inflation and kind of some more economic topics that are affecting us currently and how they may affect us for the rest of the year. So in terms of economic numbers, Amanda, we were talking earlier about unemployment, some wage growth numbers. What can those numbers tell us, and should we be paying attention to them?
Yeah, well, today we're recording this on July 5th, and so this morning they just had released the new unemployment numbers, and so the unemployment rate was up a little bit to 4.1%. And I should stress we're not economists, right? So we listen to a lot of economists, though, and so one of them, Jeremy Siegel, said he's not worried about the unemployment rate until it gets above 4%. So by that measure, him and others presumably are worrying a little bit. And then and the Fed, right? The Fed has a dual mandate on employment and inflation.
Right.
And so with a lot of people looking to the Fed, when are they going to cut rates? When are they going to cut rates? The unemployment numbers are potentially a clue to when that could happen.
Mm-hmm. Yeah, and interestingly enough, unemployment did trickle up just a little bit, but the jobs numbers of hiring, I believe, did increase, or job created, maybe.
The new jobs created was up.
Right.
So that's a great sign.
Mm-hmm.
But I think it's also consistent with a lot of the economic news we've seen all year, which is, on the one hand, there's this, on the other, there's this, and there's a lot of mixed signals, mixed messages out there. And so different economists are interpreting them different ways. As if you've been watching the news, one person says this, one person says it's the opposite thing, and it's like they're both right. So,
right.
Yeah.
Yeah, it's so murky. What do we even pay attention to? So if you are feeling anxious about the economy and what might happen or might not happen, that's understandable. And so
I like I think it was Claudia Sam who coined the phrase. She called it a vibe session. It's like people just sort of feeling like maybe there was a recession coming, and sort of coming out of COVID, and there is a lot of just things feeling different, rather than it being grounded in some real numbers.
Sure. Yeah, things were everyone was very unsure of what would happen. So that totally makes sense. Kind of going into how we feel about the economy in general. I mean, as we were saying, it's really impossible to forecast anything perfectly. I mean, the weather, for example, it's there's a chance of this, there's a chance of that. So it's kind of similar in that some, you had mentioned economist at JP Morgan had recently just been wrong for a long time and got let go. So that's kind of an interesting, someone at JP Morgan, a company that you would think is on top of things and has their finger on the pulse, like even they won't get it right 100% of the time.
Yeah.
Oh,
Yeah. And I mean, that person is in control of, billions of dollars. So
right.
it's one thing if they get the call wrong versus us as individuals looking at personal finance. If it's presumably, right, not that kind of number. But it can still have a big impact if you start to make different moves in your portfolio based on some of these macroeconomic numbers that may or may not play out a certain way. And like the experts on Wall Street don't even know. So I think it's just important to, stay humble and realize, these, you can't predict the future. How many times we say that over and over again. So even if today we're talking about some of these macroeconomic numbers, that doesn't necessarily mean that you should be doing anything different with your investment portfolio or your financial plan.
So, as Amanda was saying, it's impossible to forecast the future in general. And as we always say, and it's also important to make sure you know your source of your income, source of your information. And, that's a viable source that is trustworthy.
Mm-hmm. I mean, personally, what I try to do is if I'm seeing a lot of news that is one way, I do try to seek out sources that are framing it another way, just to get a different perspective. I don't know. I think it helps.
Yeah, definitely. So kind of another point, as we're saying, it is impossible to forecast, but we are already seeing some rate cuts in like large banks in anticipation of what the Fed might do at their next meeting or the rest of the year. The CD rate had peaked 9 months ago, you had mentioned. And so if you have a lot of cash sitting around, it's important to, maybe take a look at that, get that invested. Because that's one thing you can do in an environment where rates will be most likely cut at some point in the near future.
Yeah. Yeah. Isn't that interesting? The rates haven't been cut yet, but they're already cutting the rates in the savings accounts in anticipation of it. So I just, I looked up the number this morning. There's $6 trillion in money market funds, which is it's hard to wrap your head around. Yeah. So there's a lot of cash on the sidelines. And if you're keeping your money in cash, right, the interest rate has been good, but the interest rates are starting to come down, even despite the Fed not cutting. That's the interest rates on savings accounts.
Right.
The interest rates on mortgages maybe aren't going down, right?
Yeah, that's a different topic.
Yeah. But so just be aware, a lot of people have been in cash because it's safe and it's great to get 5+%, but it's coming to an end and it's already started. So
right.
Yeah,
something to be aware of. What else in your portfolios? So we talked about NVIDIA and AI in our last episode, and then relating to your portfolio, if you're concentrated in those tech stocks, you may also be overweight in US stocks as well. So did you want to mention something about international at this moment?
Oh yeah. There was maybe we'll link to it. There was a good article in the Wall Street Journal the other day about how the concentration in the S&P 500 has gone up significantly, with tech stocks and financials really being a huge overweight compared to what it's been historically. And so that's the US concentration, right, among large cap stocks is the S&P 500. And so it's concentrated in the US and becoming more concentrated in certain sectors as well. And so most people in the US tend to have what's called a domestic bias, right, where they favor their home country. And people like in Germany, they tend to have more money invested in the German stock market. Like it happens everywhere. But if you invest internationally, you're getting more exposure to different countries, but also like different sectors than you do at home.
Right.
Recently, the JP Morgan releases a guide to the markets, which they recently updated at the quarter end. And they showed that of the 50 top performing companies, 10 were from the US and 40 were from overseas. So that's significant. If we talk
Mhm.
about the concentration in the US, everything else is lagging. Don't sleep on outside the US.
Yeah, it's another way to diversify your portfolio.
Yeah.
So right now, kind of with everything, the state of the economy, the uncertainty, yeah, paying attention to your cash and your diversifying your portfolio are probably some things that are prudent to look at the moment.
Yeah. Yeah.
So, other things in the news, I mean, do you want to move on to this?
Yeah, I was going to
Okay.
ask you, let's talk about some other current events.
Yeah, this morning I was reading about the election in Britain, and it's just kind of interesting to see how other countries' parties work and what's kind of going on with their economy.
Yeah. Yeah, I was reading about it also. I liked how they were the Labor Party won in a landslide and replaced the Tory party has been in power for the past 14 years. I just thought it's funny how then they go and then they get permission from the monarch to
Hmm.
to lead the country. And then I also liked how they take over immediately. There's no like election in November, wait till January.
Right.
So I think you'll see the effects from that soon. But I just it's interesting that the Brexit thing has pretty much been a disaster, I think, by most accounts. I did they did say it was sort of complicated because they passed it right before COVID, which messed up the economy in other ways. So it's hard to sort of parse out what was caused by Brexit, what kind of issues were caused by COVID. But um, I mean, in that case, you can see a major election having a major impact on the economy by the Brexit thing.
Mhm.
So I don't really, who knows what's going to happen in our own election
Right.
here in the US. But it gets dicey. But if we look at averages, if we're keeping this podcast to talking about the stock market and personal finances, typically the stock market isn't impacted by a presidential election. It will get volatile and get choppy, like in the lead up, like September and October. On
Mhm.
average, obviously we just said we can't predict the future, but that's what typically happens.
Right.
And then it typically calms down after the election and tends to have a positive fourth quarter. Um,
Right.
right. Past performance is no guarantee of future results, but
Right. Yeah, if you're worried about the economy, or yeah, if you're worried about the economy with the election coming up, I mean, yeah, there will be probably some volatility, as you said, but it's
yeah,
not the thing to be super worried about.
yeah. Yeah, as far as stocks, I think that one of the major things as far as personal finance concerns is our favorite topic, taxes. Everybody
Ah,
loves to get worked out about their tax return and their tax bill, but the Tax Cut and Jobs Act is due to sunset
yeah.
next year, and how the election goes could have a big impact on what happens with that major tax bill. So
Yep.
there's that.
We will have a lot to talk about, I'm sure.
Yeah, 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 yeah. And do we want to talk about Beyonce before we go?
Sure, let's mention
Oh, wait.
Beyonce really
Beyonce
quick.
is not running for president, unfortunately, but
Unfortunately.
she does have some news with the IRS.
Yeah, I actually hadn't even heard of it. Amanda mentioned it to me earlier today, and she is apparently undergoing an audit. Um, with the details that we do have, I mean, it's interesting for me as a tax person to try to figure out what's actually going on. But just in general, like the tax code is so complicated, and people with so much money and the potential to have multiple properties and own things indirectly through S corps or different companies is so it can get very convoluted, and it's probably going to take a long time. Eventually, I'm sure they'll settle on something where she'll just pay. I'm sure I'm not sure, but I would imagine she'll end up paying something. But it's an entire ordeal and makes audits very scary. If the regular person is audited, try not to freak out. It's usually not a big deal, or the IRS just made a mistake. So
Yeah.
that's really all I have to say about that right now.
Yeah. One thing the news story said was she was having trouble documenting her expenses.
Right.
Which how many times do you tell people to save receipts and they're just like, whatever, you know?
Yeah.
You say that, right?
Substantiate everything. You can put down, your mileage. If you have your log, you can do all these things if you have this, if you're able to substantiate it against the IRS, because there are certain expenses that can get a little like murky, like, does this count? Maybe, you take a risky position, you take a more conservative approach to your deductions. That is up to you, but you will always have to make sure that in the event of an audit, you will need to prove that the expenses are relevant.
Yeah. And that they happened.
That they actually happened, of course.
So, yeah. So I don't know. Personally, I want to wish Beyoncé good luck with her IRS audit.
Yes.
I hope it works out.
Yes, best of wishes to her.
Yeah. Nobody likes an audit, but they are necessary, right?
They are, yes. All right. On that note, shall we wrap it up?
Yeah. So let us know what you think. If you have any other questions about what's been going on this year in the markets, please reach out.
Yeah.
Otherwise, hope everybody is having a nice summer.
Yes, for sure. We'll talk to you next time. Thank you.
Okay. Bye.
That will do it for this episode of Connecting the Dollars. Nothing discussed in this episode should be considered legal, financial, or tax advice. If you like what you heard, please subscribe for more at Apple Podcasts or wherever you get your content. When you do, please give us a rating and a review. To see the links we mentioned in our show, along with other great Propel Financial Advisors content, go to connectingthedollars.com. You can find our past episodes there and subscribe to our newsletter. And if you're still here because you have a general question, you can email us directly at info@connectingthedollars.com. Or, if you're interested in working with us, click the Schedule a Consultation button on our website. Thank you for listening.